This microlecture is on process analysis with life cycle and techno-economic assessment. When you get a chance, please look at the attached link for Onboard Dynamics, a company involved in commercializing natural gas compressor technology that provides self-fueling capability of vehicles with $1 gallon gasoline equivalent virtually anywhere. They are developing and selling products that will make widespread adoption of compressed natural gas vehicles a reality, largely based on something called a dual-function engine. During commuting, the dual-function engine fires on all cylinders as normal. However, during refueling with natural gas, the engine runs off of 5 cylinders, and the 6th one is used to compress low-pressure gas readily available in most homes. This is a particularly interesting development because a significant reason for the dominance of gasoline and diesel as fuels is their distribution network. They are easy to fill up and easy to transport. The only other 2 sources of energy that have that kind of distribution in developed nations are electricity and natural gas. Electricity has been getting a lot of attention lately, and electric vehicles seem to be making large strides. But natural gas vehicles have not been discussed nearly as much, despite the fact that natural gas is widely available all over the place. This company and others like it aim to change that, and these developments will be important for the energy world to watch closely. Please take a moment to review this week's learning objectives. Something frequently mentioned in life cycle analysis and sustainability discussions is the triple bottom line. The triple bottom line incorporates the notion of sustainability into business decisions. It is an accounting framework with 3 dimensions: social, environmental, and financial. The dimensions are also commonly called the 3 Ps, people, planet, and profit, and are referred to as the 3 pillars of sustainability. Interest in triple bottom line accounting has been growing in both for-profit, nonprofit, and government sectors. Many organizations have adopted this framework to evaluate their performance in a broader context as it relates to sustainability. Life cycle assessment, or LCA, is somewhat about mass and energy mapping. The technique works to map the sources and destinations of all the mass and energy used to make a given product or as part of a process. By mass, we mean the carbon, nitrogen, phosphorus, metals, etc. that the thing might be made of. By energy, we mean the fuels and electricity that were necessary for the thing to go through its process. Once we know all of this, technically we can use it as a metric to determine how intensive or sustainable the process is. A cradle-to-grave approach for assessing industrial systems evaluates all stages of a product's life from the perspective that they are interdependent, meaning that one operation leads to the next. It also provides a comprehensive view of the environmental aspects of the product or process and a more accurate picture of the true environmental trade-offs in product and process selection. The LCA technique assesses the environmental aspects and potential impacts associated with a product, process, or service. It does this by compiling an inventory of relevant energy and material inputs and environmental releases, by evaluating the potential environmental impacts associated with identified inputs and releases, and by interpreting the results to help decision-makers make a more informed decision. ISO 14040 describes the principles and framework for LCA. This includes things such as the definition and the goal and scope of the LCA, the life cycle inventory analysis phase, the life cycle interpretation phase, the limitations of the LCA, and several other important aspects. These are the primary components of the LCA approach: goal definition and scoping, inventory analysis, impact assessment, and interpretation. Goal definition and scoping is about defining and describing the product, process, or activity. You establish the context in which the assessment is to be made and identify the boundaries and environmental effects to be reviewed for the assessment. Inventory analysis is about identifying and quantifying energy, water, and materials usage and environmental releases. Impact assessment is about assessing the potential human and ecological effects of energy, water, and material usage and the environmental releases identified in the inventory analysis. Finally, interpretation is evaluating the results of the inventory analysis and impact assessment to select the preferred product, process, or service with a clear understanding of the uncertainty and the assumptions used to generate the results. If you want to try a hands-on approach to learning about LCA, the GREET model is a great place to start. GREET stands for Greenhouse Gases, Regulated Emissions, and Energy Use in Transportation. GREET is an LCA model developed by the DOE and Argonne National Lab. The model has two integrated components. One is the well-to-pump fuel cycle analysis, and the other is the well-to-wheel vehicle cycle analysis. Argonne National Lab has developed a simulation tool for quantitative analysis of energy and emissions using the GREET model, and the model has been applied to a wide variety of transportation fuel scenarios. It can be used for models for life cycle assessment of transportation fuel systems, for consumption of total energy and fossil fuels, and for emissions of pollutants. Performing an LCA can be resource and time intensive. There is often limited data availability and data quality, and furthermore, LCA is only one component in decision-making, since cost and technical feasibility must also be determined. Though LCA can identify potential environmental trade-offs, converting the impact results to a single score for decision-making requires value judgments that can be subjective. There is also a constant challenge in deciding boundaries and where to draw the box around the process. The model is only as good as its design, and the design is related to what's going into the model. This creates a challenge because rarely are two models exactly the same due to situations rarely being exactly the same. So comparing models to one another is usually not a fair assessment. If one model could be used for everything, this would be great, but that is not particularly reasonable, so it can be difficult to figure out how to use LCA data. Techno-economic analysis, or TEA, is another valuable tool. The major purpose of techno-economic analysis is to evaluate whether a process is economically feasible. We need a quantitative analysis to assess whether the process is economically reasonable or, in simpler terms, makes money. In order to do this, we need to establish a theoretical configuration of the process and estimate the cost associated with the process. With this cost estimate and some economic assumptions, we can generally determine the value of the product, whether it is a biodiesel, a bioethanol, a biogas, biogasoline, etc. Techno-economic analysis is very important as a tool in that it can also be used to determine how we're going to build a plant. The variations in the plant design likely affect the profitability of the process, and the fluctuations in the market, such as ups and downs in feedstock price, also impact the product value. Techno-economic analysis can help us be prepared for those things by letting us know what these impacts are before building and operating the plant. It is a multi-step methodology because you must develop a basic theoretical configuration, or a model, and then you must determine the cost estimate for the investment and the capital cost. It can be used for determination of product value such as net present value or discounted cash flow rate of return. It is also often used for interpretation by supporting comparisons among scenarios and things like sensitivity analysis. The costs associated with a biorefinery plant are very dynamic and have a lot of components. To build a plant, the equipment needs to be purchased and installed. The costs for equipment installation typically scale with the costs for equipment purchase, so we can often use scaling factors for the estimates. There are also some other types of indirect costs that must be considered, such as engineering, construction, legal and contracting fees, and other fees that will be incurred when the plant is built. These costs can be estimated parametrically using differences in scale based on the size and the type of the plant. In addition, often 20% of the total direct and indirect costs are added to the estimate for contingency, risk management, and uncertainty purposes. In addition to building the plant, operating the plant to make products also costs money. Such costs include direct production costs which accompany the production, as well as fixed costs that are more closely associated with the plant itself. The plant overhead costs include the routine services, shipping, warehouse management, and so on. After the products are made, selling them will incur more costs. Expenses in marketing and R&D typically fall into this category. Gross earnings expenses are basically income taxes that are associated with the earnings. When you are trying to figure out what the product must cost in order for the business to make money, you must include the cost of operating the facility and the cost of selling the product. This may be a little confusing, but please try to follow along because it will offer important context for what we have been discussing. We're going to do an example walkthrough of a possible techno-economic analysis. We are looking at a process that converts corn stover to fuels. Corn stover will first be converted to bio-oil via a fast pyrolysis process, and then the bio-oil will be upgraded into a drop-in fuel through upgrading using hydrogen. Based on what we have previously learned, this is a thermal conversion followed by a chemical conversion. In this case, we need to decide what direction to go with the chemical conversion. The bio-oil requires hydrogen to be converted into gasoline and diesel, but where will we get the hydrogen? We will be looking at two scenarios, one in which we produce hydrogen from biomass, and another in which we buy hydrogen from an outside source for the bio-oil upgrading. We will develop rough cost estimates under these two scenarios and compare them. The first step of a techno-economic analysis is to build a theoretical model to base our estimate on. This is the first half of the process, showing how the biomass is chopped, dried, and grinded before being sent into the pyrolysis reactor. The pyrolysis vapor is separated from the particulate char and condensed into a bio-oil. The non-condensable gases, such as carbon monoxide, are sent to a combustor which generates steam for the process. Everything in this part of the process is mechanical and thermal. Once we use these mechanical and thermal processes to make the bio-oil, we then send the bio-oil to a chemical process for hydrogenating or hydrotreating. The second half of the process is the upgrade of the bio-oil into drop-in fuels like diesel and gasoline. This picture contains both scenarios. Scenario 1 is shown inside the dashed lines. The unit operations contained inside the dashed lines are used to produce hydrogen from some of the bio-oil for the upgrading of the other bio-oil. This way, the hydrogen needed for upgrading is produced from the biomass, so you lose a little bit of your bio-oil because you use it to generate hydrogen. Scenario 2 would be this process without everything inside the dashed lines. If we removed all the unit operations inside the dashed lines and just bought hydrogen from a gas vendor for the hydrotreating hydrocracking step, we would be purchasing the hydrogen from an outside source instead of making it ourselves. You can see the challenge here. Do we pay more for unit operations so that we can do it ourselves, or do we build less stuff and then just pay a higher price for the hydrogen? There is a big difference between being self-sustaining and being sustainable, both in terms of life cycle and economics. In techno-economic assessment, after we set up the process model, we need to outline the specifics of the design and the assumptions that we will use for the cost estimate. These specifics and assumptions are important because they determine the sizes and types of the equipment we need. For example, if we would like greater storage capacity for bio-oil and char, then we will need more storage and piping equipment. If we want to grind the biomass to smaller particle sizes prior to the pyrolysis, then we're going to need to use more energy for the grinding or even use different types of size reduction equipment. All of the unit operations shown in the blue boxes in the previous slides have to be considered like this. Sometimes there are hundreds of them in a big plant, and each has to be worked through to develop a functional and realistic model. Once the design basis has been analyzed, there are still a few other steps that are necessary. Some assumptions important to the economic model are not directly related to the plant design, but will still affect the economic aspects of the plant operation. These non-design assumptions are related to plant operations and corporate financing, and in many cases these are critical issues that must be kept in mind. The plant needs a certain period of startup time during which the plant gradually ramps up its productivity to reach peak capacity. The relatively low productivity during the startup period leads to higher cost of production. Keeping enough assets as working capital is also very important for uninterrupted plant operation, as we need to make sure there is enough operational liquidity when we are designing the cash flows. Many of these acronyms and terms may be unfamiliar to you, but it is important that you are aware they exist and why. If you are especially curious about any of them, please ask or look them up online. We are not going to have time to work through all the finer details of the cost estimate, so instead we're just going to look at the results. As we compare the two scenarios, using biomass-derived hydrogen or using purchased hydrogen, we can see a lot of differences. As we discussed, producing hydrogen on-site requires all of those unit operations shown inside the dashed lines. This will result in a higher capital cost for the plant, but potentially a lower operating cost as no hydrogen gas vendor is needed. However, on-site hydrogen production will also use up some of the biomass bio-oil as feedstock, so we'll take a hit on the fuel yield under the assumption that we have a fixed biomass supply. As we can see, the capital cost for producing your own hydrogen from biomass is much higher than buying your hydrogen from the gas vendor. However, the operating cost of buying your hydrogen is somewhat higher than making it yourself. The true comparison comes when looking at the product value, because the product value includes all the capital and operating costs of both scenarios. Two things are apparent. First, it costs a lot more to make fuels in Scenario 1 than Scenario 2, making buying your hydrogen the better choice. Second, the Pioneer plant values are far more dramatic for Scenario 1 than Scenario 2, telling us that Scenario 1 is potentially a lot more risky but might have good upside if the cost of hydrogen changes a lot. A Pioneer plant is a first-of-its-kind plant. When you build a type of chemicals plant that no one has ever built before, it is called a Pioneer plant. In a field like bioenergy, the difference between a Pioneer plant and a mature plant is often significant. There are certain risks associated with building a first-of-a-kind plant because they have more problems than a mature plant, and we usually don't even know what those problems are going to be before we run into them. Overall, it is important to understand that this techno-economic analysis suggests that buying hydrogen is a better idea than making it yourself, particularly if you will be the first company to ever build a plant like this. When you have a chance, please visit the attached link that discusses a new lawsuit against the EPA regarding emissions. The lawsuit calls for EPA to review the methodologies used to measure emissions of volatile organic compounds, or VOCs, from liquid storage tanks, industrial flares, and wastewater treatment systems. The Federal Clean Air Act requires EPA to review and, if necessary, revise these emissions factors at least once every 3 years. Despite this requirement, EPA has not reviewed some of these factors in over 20 years. U.S. refineries reported releasing almost 38,000 tons of volatile organic compounds from flares, tanks, and wastewater treatment plants in 2010 alone. However, recent EPA studies have measured actual emissions of volatile and toxic compounds from U.S. refineries at levels 10 to 100 times higher than estimates based on the outdated emissions factors. EPA's failure to revise these factors has resulted in significant underestimation of reported emissions from a variety of industrial processes, allowing hundreds of thousands of tons of pollutants to go unreported each year, and potentially posing significant health risks by exposing nearby communities to higher levels of pollution than the law allows.